Most taxpayers treat IRS audits as interchangeable inconveniences. Listen, that's a mistake. The type of audit the IRS selects tells you how serious the agency believes the issues may be. And more importantly, it tells you how aggressively they may develop the case, potentially criminally. A correspondence audit's exposure is not the same as an office audit. An office audit's exposure is not the same as in a field audit. And in wrong circumstances, you need to know this, any one of them can quietly evolve into a criminal tax problem. Today I'm going to explain the differences and why your response strategy must change depending on which audit type you're facing. The one with the least exposure, correspondence audits. They're the most common and also the most underestimated. A correspondence audit is conducted by mail or secure electronic communication. There's no in-person meeting. There's no office visit. There's no field agent coming out to your business. These type of audits usually follow on narrow issues: charitable deductions, earned income credits, stock bases, 1099 mismatches, education credits. Because they feel administrative in nature, taxpayers and their representatives often respond casually. That's where problems can begin. The IRS has come to expect timely responses, complete documentation, consistent explanations. If your documents appear reconstructed, if your explanations shift over time, if a bank deposit analysis doesn't align with what you reported, these types of audits can expand towards criminal prosecution. And here's where taxpayers create real danger. They try to fix things after the fact. They backdate invoices. They fabricate receipts. They alter records. If you do that, we're no longer talking about documentation issues. These actions become affirmative criminal tax acts, and affirmative acts are how civil cases can become criminal tax cases. In an office audit, the risk escalates. An office audit requires you and your representative sometimes to appear at an IRS office. Now you're dealing with live interaction, live questioning, live credibility assessment, including an observation of your body language if you go in person. These audits often involve Schedule C businesses, rental properties, flow-through entities. They usually focus on higher dollar adjustment items. The biggest risk here isn't the underlying paperwork. It's what you say, the casual statements, the over-explaining, the guessing instead of knowing, and, most dangerous, inconsistent answers between what your tax returns had to say and what you say in the following interview. Those are the most powerful evidence of criminal tax intent. Once a revenue agent believes there are firm indicators of fraud in your audit, they can consult a fraud technical advisor in your case. From there, behind the scenes, an internal fraud development begins. And if you or your lesser representative most of the time don't even pick up that it's happening. Office audits are where poor representation does serious damage. We see it all the time. An accountant, a CPA, an EA, or some type of preparer goes in focused only on the math, and they miss the criminal tax exposure issues entirely and the clues they're looking at. Field audits is where there's the maximum exposure. The field audit is the most intrusive form of civil audit. The IRS comes to your business. They may come to your home or to your representative's office. These audits typically involve high net worth taxpayers, businesses, complex transactions, audits with significant potential tax loss. Field auditors are allowed to tour your business. They can analyze your internal controls. They can observe your operations. They can also tour your home and assess your wealth and lifestyle. They evaluate your lifestyle against the income you reported. Listen, they're not just reviewing numbers here. They're evaluating economic reality. If they see cash handling inconsistencies, destroyed or missing records, a lifestyle that doesn't match reported income, aggressive deductions with weak or non-existent support, they can build a factual record. At best, that record can support a 75% civil fraud penalty. At worst, it can lead to a referral to the IRS Criminal Investigation Division. This is where civil audits become extremely dangerous. Listen, most civil audits automatically equal some type of criminal tax exposure. But every audit carries criminal tax escalation risk. The IRS watches behavior as much as they do the underlying numbers. They look for delays, evasive answers, contradictions, altered documents, inconsistent stories. They're looking for criminal tax intent, not so much math. Intent is what turns a civil audit into a criminal tax investigation and prosecution. And if your audit gets referred to the IRS Criminal Investigation Division, everything changes. Your rights change, your exposure changes, and your options narrow. You need federal criminal tax defense. And the bad news is, IRS Criminal Investigations has a 90% conviction rate. We also have to be on the lookout for multi-state and California complications with your federal audit. California, for example, your risk increases further. Federal audit findings are often shared with the Franchise Tax Board, the California Department of Tax and Fee Administration, the California Employment Development Department. This can lead to parallel civil exposure. Now you face federal adjustments, state income tax assessments, payroll tax enforcement, and California sales tax exposure. What can begin as a routine audit becomes a multi-agency enforcement nightmare. This is where strategic control matters most. Whatever you do, be careful who you hire. So in conclusion, you need to control the audit before it controls you. If you've received an IRS notice, do not assume it's routine. The audit format matters, but more importantly, your response strategy determines whether your case is going to stay civil. At our firm, we evaluate the audit type, the issue scope. We look at the revenue agent's behavior. It's always telltale. We look for the potential federal and state tax fraud indicators. We evaluate the civil and criminal tax exposure risk. When audit risk intersects with potential criminal tax exposure, you need representation that is not, I repeat, not the original preparer. That person can throw you under the bus to protect their own reputation. They don't want to be in a jail cell next to you. You need a dual licensed tax attorney and CPA team that understands both technical tax law and criminal tax enforcement mechanics. If you want to protect your net worth, your business, your professional license, your reputation, and yes, your very freedom, your right to stay out of jail, contact the tax law offices at David W. Clossy today for a confidential reduced rate consultation. Call 1-800-681-1295 or visit clossing-associates.com. The earlier you control the record, the more likely your high-risk audit stays civil. To date, we have never had a tax audit client that we represented criminally prosecuted for tax crimes. Call me today. You won't regret it.